Thank you for joining us this Friday, the 17th of May. I'm Sophia, a market analyst with Bell Direct, and this is your weekly market update. Well, this week, the Treasurer revealed the federal budget, announcing a surprise surplus of $9.3 billion for the past financial year. This windfall stemmed from strong commodity prices, inflation boosting tax revenue, and unexpected job growth. However, the good times aren't expected to last. Forecasts predict a return to deficits in the coming years, with an initial deficit of $28.3 billion projected for 2024 to 2025. The budget also anticipates inflation dipping back down to the Federal Reserve's target range by the end of the year. Now, the budget historically has limited implications for the financial markets. Most new spending plans and tax cuts were already anticipated, and even the predicted deficits are modest compared to Australia's overall economic growth. However, here are some key financial planning takeaways you should know about. Considering the cost of living, lower energy bills. So starting July 1st, households will automatically receive a $300 credit on their electricity bills. Around 1 million small businesses also get a $325 boost to help manage energy costs. And the reworked tax costs originally aimed at high-income earners have shifted gears. Now most Aussies earning above the tax-free threshold will benefit, with an average weekly tax cut of around $36. Looking at housing supply, so the budget proposes a significant investment, that's $11.3 billion, to construct 1.2 million new homes within 5 years. These houses will specifically target women in crisis, low-income families, and the homeless, helping to address the housing shortage. And in the aim of increasing social and affordable housing, an additional $1.9 billion in loans will be allocated to build 40,000 new social and affordable homes, further expanding housing options for vulnerable Australians. And considering your superannuation, well, the government recently unveiled these superannuation changes in this budget. These changes focus on boosting retirement savings and giving Australians more control over their super. So super guarantee increases were confirmed. The gradual rise of the super guarantee contribution rate to 12% remains on track. So from July 1st, employers will contribute 11.5% to your super, up from 11%. The higher contribution limits is good news for savers. The maximum amount you can contribute to your super each year is increasing to $30,000. And what didn't change? Well, the new tax rules for higher balance super funds will still come into effect July 1st, 2025. Now, looking at the market's performance this week so far, our local market advanced 1.7%, with consumer discretionary sector gaining 4.5%, followed by the healthcare sector. On the ASX 200 leaderboard, Aristocrat Leisure was the best performing stock, gaining an impressive 16% on a profit beat following the release of its FY24 first half report. Meanwhile, Fletcher Building, that's FBU, declined the most after the building company released a disappointing trading update. As for the most traded stocks by Bell Direct clients this week, these included CBA, Celix Systems, that's SLX, and clients bought into Woodside Energy, ANZ, and Macquarie, while took profits from Jumbo Interactive, Westpac, NAB, BHP, and Sun Silver. And the most traded ETFs by Bell Direct clients this week were the Australian Equities Strong Bear Hedge Fund, the Vanguard US Total Market Shares Index ETF, and the iShares S&P 500 ETF. End-to-end economic data to look out for next week. Well, on Tuesday, Westpac's consumer confidence data will be released and the RBA's meeting minutes. Then on Thursday, the manufacturing and services flash PMI is out, a forward-looking estimate of the final PMI released the following week. And that's all for this morning. I'm Sophia with Bell Direct. I hope you have a great day, and as always, happy investing.